Hey Facebook, welcome to the Twin Cities Real Estate Show. Today we are going to be going over knowing your loan.
Good one.
Yes, it is. I got worried there for a second that I didn't actually link the mics with Facebook, but I just realized I did. So
We did.
I
That
should.
did happen not too long ago.
yeah, that didn't work out so well. Whole show of us just talking at the camera.
Mimes.
I think someone chimed in at the end. When
Yeah,
we were
yeah.
talking. Oh, by
yeah,
the way, we can't hear you.
Yes.
Oh, all right.
Yeah, that didn't work out so well. So yeah, today we're going to be talking about the importance of really understanding your loan and how big of a part of the process it is, and how much it can throw off the buying process. And with the market the way it is right now, you cannot be affording hiccups
Right.
like that when you're shopping,
Not at
because that could easily take you completely out of contention of a home that you like.
Yeah.
So we're going to get into those nuances. Stick around for the after show, as we may have some additional things to cover there. As always, type in any questions that you have, and we will try to answer them during the breaks or address them during the show or the after show.
Or the after show.
Yes.
Join us on the after show.
All right, you ready?
Ready.
Here we go. Are you thinking about buying or selling a house, or just want to know what might be going on with one of your biggest investments? Then come hang out with us for a little while. Hi, I'm Kirk Duckwall, and welcome to the Twin Cities Real Estate Show, sponsored by Bricks Real Estate, Network Title, Eric Bloomstrand and Chad Preview with Bell Bank Mortgage, and James Tolfson with Country Financial. If you have any questions, make sure that you give us a call at 651-303-0019. Again, 651-303-0019. You can also check us out online anytime at brickstwincities.com for the latest and greatest searching and researching tools, along with all of our publications, to include the Bricks Report, which has market stats for many of the different communities through the Twin Cities, along with our Facebook page, where you can follow us there, recording live around the noon hour most Tuesdays. All right, today we're going to be discussing knowing your loan and the importance of the lending process in the home shopping, right? There's a lot of companies out there that try to make it seem like this is something you don't need to have ready, and say that they can just get you a pre-approval right away, or a pre-qualification, I should say, right away, without taking the time to really figure out what it is
Right.
that you want as the consumer and what you qualify for as the consumer. And this can cause some huge issues. So today in studio, we have Chad Preview. Thank you again, Bell Bank Mortgage, for coming in.
Yeah, thanks for having me.
Jebediah Schwarzbuckler, no, Joe Schwartzbauer from Grey Duck Properties, Bricks Real Estate. Thank you for coming in.
Thank you to have me. Thank you for having me.
Just throwing you off.
You threw you
Yep.
off.
All right. So, and we were just talking about that, Joe, of how the lender's reputation.
It's hugely important.
Yeah.
I mean, it's a lot of times in the market that we're in, it's the difference between winning and not winning. I mean, I just had a loan specifically that we were up against a Bell lender, and they chose the Bell lender because the two offers were basically identical minus the lender.
Right.
Yeah.
Right.
So they went with the very reputable
Yes.
lender. And
It's important.
and just because a company is big does not mean it's reputable.
Right.
Right? And that's something that we see. And you shouldn't always just jump immediately to your banking institution that you bank with necessarily either. And so often we see people, I'll just be like, well, do you have any recommendations for a loan officer that were given to you? Do you have a reputation or a relationship with a loan officer that you've worked with in the past? And they'll just be like, no, I just went to my bank.
Right.
And it's like,
Right.
okay, well, that's one place you can go. But it's good to shop it around a little bit.
Totally.
Look
And-
at your options.
Yeah.
Yeah, and it's our system is set up to allow for that.
Well, it's one of the biggest purchases you ever make.
Yeah.
If you don't shop around, it's just not a smart move in all
Right.
reality.
Right. So first, I want to go through the shotgun approach and how we see a lot of people approach this situation. Okay, so they come across a home that they like, whether that's a house down the street, whether that is a property they came across online, and they want to go see it right away. They have not been pre-approved. They have not been pre-qualified or whatever. They haven't done anything, right? And even worse if they have a house to sell, right? And it's the mindset of, well, I just want to go look at it. I don't want to do anything until I go look at that. Well, that's starting that snowball of failure lining itself up, right? Because you took away one of the biggest, most important things, which is, well, this maybe the sale of your home, and how are you going to manage that with your financing? And you're going out ready to potentially make an offer without figuring out those two pieces of the pie first.
Yeah, not knowing what you're going to sell for, not having your home ready to go on the market, doing those simple upgrades that can be done to make sure you're getting the most out of it.
Right. So, you end up going and looking at that house, and you find out you don't like the house. Okay, so be it. You avoided disaster. But you're still not taking that step to start the pre-approval process because you're not ready to do that because you haven't found a house you like yet. And as we've talked about previously, that you are not ready to be looking at homes until you've done that.
Right.
Because you're doing it completely opposite of the way that a smart home buyer will do that. And so,
speaking of smart home buyer,
hey, we have this guide under publications at BricksTwinCities.com called The Smart Home Buyer, and it will go through the steps you want to take. I mean, leveraging the market, leveraging knowledge can save you tens of thousands of dollars on loans, on homes.
Literally.
The whole process, make you more money on your house, to take a little bit of time and go, oh, if I do everything I thought, but I just changed the order of it, I can be really successful in this process.
put you in a much better position.
Mm-hmm. I mean, the term, putting the cart before the horse.
That's a real thing.
Right? So this is a real thing. I'm sure people listening out there are shaking their heads. They're going, yep, I've done that, or nodding their heads, I should say, right? Yep, I've gone down that path. The key is catching yourself. Hey, I see this home down the street I like. Okay.
I wonder if I can afford it.
Right.
Yeah.
Okay, so I'm going to continue with
yeah.
the shotgun real quick. So you keep looking, and you have an agent that's not willing to step out and say, hey, you really need to do this. This does not make sense. So they're just being a yes person to you, opening doors. Boom, you're ready. You find a house. You like that house. Now you hop online to fill out an application. And then you get a pre-qualification letter from a not-so-reputable lender versus a pre-approval letter, and now you're going head-to-head against somebody who did do the right steps.
Yes.
Yeah, let's talk about that for a minute. I don't mean to cut you off, but there's a big difference between a pre-qualification and a pre-approval. So, when you talk about reputable lenders, local lenders, they're going to take their time with you to collect documentation like your pay stubs, your W-2s, your tax returns. They're going to want to look at your assets like your bank statements, your retirement accounts.
Right, and at the end of the day, every lender is going to do that. And you're not going to avoid that. So if you think, oh, that's a lot of work, if you go to the online lender, they're still going to do it. But see, the problem is they're going to do it probably post-offer. And then they're going to give you a whole bunch of news that you're like, well, you didn't tell me that, you didn't tell me that, you didn't tell me that. And now that snowball of failure is even bigger.
Now you don't even qualify to buy the house.
You don't even qualify, or your interest rate is way off.
Right.
All these expectations have just crumbled. And now you may be having your hand forced in a sense in something you weren't prepared for, all because you weren't ready to start shopping for a loan. So instead you went that shotgun approach.
Yeah, you want to have your pencil sharp. I mean, like you guys mentioned already, this is a fast moving market.
Right.
So when you're coming to me, and I have a gentleman right now where he's already looked at a house, wants to make an offer, but has not applied. And it's okay. We're going to do that. We're going to make it great.
Right.
But it's going to be stressful on him. And I told him up front, this is going to have to go like this, just by, documents, everything just like this in order to close within that time frame. So just setting that expectation correctly up front is key to success. But you don't want to go that route if you can't help it, because buying real estate isn't a rush. Then you start making decisions that might not be the best decisions. Or if your loan officer pulls your credit and notices you may have some high credit balances, or maybe some things on your credit that you can correct or
Right.
fix.
Right, which gets you a better
jump
interest
jump
rate.
that credit score up 30 points. Now you're
Yep.
talking about a better rate, a better loan program, and a totally better situation down the road for you financially.
Right.
So-
I mean, these companies love when you don't apply until the last second because
Totally,
they're able to completely just take
This is what you
100%.
get.
Yeah, that 100%.
they don't leave you with any options.
Yes,
Right.
They
Yeah.
don't- and you don't have any options
Correct.
because you went the wrong order.
You're too
Right.
far into it at that point.
So,
Exactly.
you know, the key is apply right away. Yes, you probably are going to see a home that gets you excited. That's what happens.
That's good.
Right?
It's part
right?
of the process.
Then you step back and go, okay, what is the order that we're going to do this in? Put this together. Give yourself some time.
Right.
Even if you see a house that you like and you want to make an offer on it, you know, there are things you can do, the contingencies that you can put in place to give yourself a little breathing
Right.
room
Right.
there to set yourself up. But just, you know, find that reputable local lender, and maybe that is with the bank that you're with.
Right.
Maybe that's with, you know, a recommended loan officer.
it's
Maybe
it's your decision
maybe it's
as a
with
buyer.
Chad, right?
Yeah, and I'm going to recommend going with a loan officer that's going to be available for you not only in the evening time, but on Saturdays and Sundays, because that's when you're not working and you're out with your agent looking at properties. And if you can't get numbers or a pre-approval letter on the weekend or in the evenings, you're not going with the right loan officer.
Yeah, I
Yeah,
mean,
that's-
I don't know what the stats are on it, but I gotta say that the vast majority of offers are accepted on the weekends.
Yep,
Right.
evenings
That's when it
evenings or
happens.
weekends. Yep,
Exactly.
that's when we're writing them. So, yeah, you want to find somebody who's working when you're looking, because that 9 to 5 banker's hours, it's going to hurt you. It's going to bite you. Okay, we're going to take a quick commercial break, and then we're going to get into some of the different loan products and how those may have advantages or disadvantages depending on who you are. We'll be right back.
Should tell Libby she can come in real quick.
Yes, let her in. Yeah, when you're recording in the main conference room to get a little more social distancing, we have people that
Get a
want to
little
come in.
activity
Yeah,
going
little
on,
people want to
yeah.
come in and out of the building.
People want to do some business
So,
around
yeah,
here. I like
exactly.
it. Perfect.
Okay, let's see. Do we have? See, I'm not able to. Am I able to see chat? I don't know. Can't tell.
Yeah, we're never pushy with our clients. The only thing we're ever pushy with is the approval. Like, go get it done.
Yeah, you're only hurting yourself.
Totally.
Can't make an
100%.
offer without being
Exactly.
approved.
It's
You
like-
can't write an offer. We can go look at as many
It's like
as you want, but
you can just see it. It's like.
yeah, seriously.
But wait, I
Right
don't
in the
want my
foot.
credit pulled.
Yeah, right.
I hear that one
Yeah.
a lot.
Yep.
Yeah.
And I get it. People don't know, and it's educating. That's what we
It
do
is.
best.
It's so much education.
Well, let's talk about that when we come back into the show, the credit
Yeah.
pull thing.
Yeah.
You know, obviously, these short segments, but stay for the after show. All right, ready? Here we go. Welcome back to the Twin Cities Real Estate Show on AM 950. Have Joe Schwartzbauer, Grey Duck team with Bricks Real Estate in studio, and Chad Preby, Bell Bank Mortgage. Today we're talking about knowing your loan and how important it is to do this very early on in the process. You know, for first-time buyers out there, this could be the difference between getting qualified for the right loan for the home that you're looking for and the wrong one.
And over the course of a loan, saving tens of thousands of dollars.
Yeah, absolutely.
Definitely.
What did I say that I was going to touch on as soon as we came back? I'm
Loan
blanking.
products.
There was that, but then the credit pull.
Oh,
Yes,
credit
the
pull,
credit
yeah,
pull.
good one.
Right. So there's this myth that you're going to destroy your credit by going out there and applying for a loan. And
Right.
I mean, what is typical that it does ding your credit on that hard pull?
It's a couple points
Yeah.
here and there, but I tell
2
you
to-
what,
2 to
if
5
if you
type of
have
thing?
that good credit score, or even if you don't, it rebounds fairly quickly.
Right.
But the
right,
whole
and that only
point
happens
is-
for the first pull within 45 days. I
Yeah,
think it is. Right.
exactly.
Right. And so the point
Yep.
of that is to prevent mortgage or fraud in general, right? That's the whole point of the NICS. So you're not going out there. When somebody says it's destroyed their credit, you can almost always look and you'll find,
something else destroyed their credit.
they charged up huge on a credit card, then they applied for other cars, went and
Right.
bought a car, they did
Yep.
this and that
Yeah,
and the other thing.
30-day late.
That right,
Yeah.
a 30-day late. That's what wrecked their credit, not
Right.
applying for a mortgage. Actually, we
Right.
just came across, I think, somebody who was like, yeah, I applied and it was like a 50, 60 point hit. And I'm like, there's something else going on.
Yeah,
and
but
it was something else that was
Yep.
going on. I think it was a 30-day late. like you said.
Exactly. That
right?
sounds like a 30-day late.
So,
And one thing too, you cannot get a loan until you have your credit pulled. So, and it's never too early to apply. I tell people this more often than not is your credit report's going to be good for 4 months, so 120 days.
yep.
After that 120 days, if you're in the market still but not as actively looking or maybe decided to go another route, we don't pull your credit again. You know,
Yeah, it's just
But-
it's supplying new pay stubs and that
Yeah.
type of thing. Has anything changed, and you can get a new approval.
correct.
Oh.
Yeah. So pulling your credits, that is the most important piece of the puzzle. But it allows me as a loan officer to evaluate your financials, look at your credit report. If there's things that I can do to increase your credit score, like we touched on, it's going to allow you to have possibly more buying power, a lower interest rate, which is going to save you thousands of dollars in the future, and get you into a better loan program. And get your offer accepted with certain loan terms,
Right.
right?
Yep.
Yeah, I mean,
So-
the typical, shotgun approach consumer is looking at it from, I don't want to apply because I'm going to wreck my credit, and then what's your interest rate? And it's
Right.
like you are completely worried about the wrong
wrong-
things. You are
Exactly.
100% worried about the wrong things. You need to reverse your priorities and start out with what loan product works for me, right? Because on any given day, Chad, what's the spread of rates you could give somebody?
It could be huge, but the thing is too is like if I'm buying a townhome or a condo,
Right.
that may determine what type of loan product I go with.
Right.
Right. You're not probably going to look at an FHA loan.
Right.
You're going to most likely look at conventional. But different credit score buckets determine that interest rate. So there's so
Right,
many different
and
things.
then you can do lender credit and buyer credit, and you
Correct.
could get a point or whatever spread.
Exactly.
Right?
When we have one right now closing soon where, young lady buying her first house, she doesn't have a ton of money in the bank, but we looked at Minnesota Housing Down Payment Assistance, but determined that if I bump her rate up, not quite 0.5%, which seems like a lot, but it got her back almost $2,500 in lender credits.
That's huge.
To offset the money that she did not have, and now we're going with a straight conventional loan without down payment assistance. So
Right, which then is a better
that
rate,
saves
right?
Better rate.
Much better.
You don't have a second mortgage to pay on, which is your down
Right.
payment assistance money. Not saying that's a bad loan, but that's why we want to start the process early.
Yeah,
to
you got to know the
determine
whole
those
picture of
things,
everything, right? To
So-
figure out what is
Yeah.
the best.
So yeah, it's going at it from, well, what is it I'm looking for as the buyer,
Right.
right? Because again, if you go with what's my rate, how well did the surgery turn out, right? That's asking the question before the surgery even started.
Right.
Have you recovered? Do you feel good? Is
Right.
everything good?
Right.
That's asking the rate right away.
Yep.
What down payment are you looking to do? What term are you looking to do? How
Right
are
on.
you handling your closing costs?
Exactly.
Right? Those are the questions, right?
Property type, down payment, credit score. Those are the things, how much you're going to pay in closing costs. Those are the things that drive that rate. So once we determine all of those factors, then we can determine what your interest rate is. And I tell you what, interest rates are amazing. So if you're out shopping for interest rates, you're gonna find a great rate regardless. So
Right. If you
we
shop
don't-
around for it, you could find it.
what I say is anything less than 4% is a great interest rate, and we're sitting in the low threes depending on your credit score right now on a conventional
Yeah,
loan.
it's crazy.
And I will disclose that's not for everybody out there, but there's awesome opportunities out there. You can't borrow money for cheaper,
It's crazy.
so
Good time to buy in that sense.
if you're in the market, let's talk. Let's get the process started and just have a conversation.
We have a few minutes left of the show here. I just kind of want to do a quick rundown. So we got about 5 minutes.
Okay.
Of the different types of loan products. So let's start out with that MHFA, FHA, and/or conventional. What is it?
Yeah, good question. So it's a good product. It's basically a conventional or FHA mortgage backed by a second mortgage funded through the Minnesota Housing. So basically, you have it's basically for somebody that has a qualifying credit score but not a ton of money in the bank.
Okay.
The minimum required money out of pocket is $1,000.
Yep.
Okay.
which is crazy.
Which is
It's
crazy. So
crazy. I
you
mean, you
can
can buy a
li-
house for as little as $1,000.
You can literally buy a house for
It's
$1,000. I like to prep my clients to have at least $1,500 in the bank, just to, just in case we're a little over. We can't usually get to $1,000.
Right.
So just plan on having $1,500 in the bank. Just one thing to note too: that cannot be cash. It cannot be borrowed as far as a gift. It has to be sourced through your payroll or tax refunds, stuff like that.
Okay, let's jump on to FHA. Just
Yes.
straight FHA, no assistance.
FHA, another government loan, great loan to have. That's designed for someone that is most likely a first-time home buyer. It comes with a 3.5% down payment, and it tends to cater to someone with a little less of a credit score. Your 640 to 680 range.
Right, and then let's jump over to the 3% down conventional.
Very popular loan program. 3% down conventional. You do not have to be a first-time home buyer. You just have to fit within the income brackets in the county that you live in or purchasing in.
And this one can make a lot of sense for that buyer who may have thought they were FHA but wants to do a townhome or condo, right?
Correct. The nice thing about that, and you just made a very good point there, is when you just do a standard conventional loan, there's going to be, if you're buying a condo,
Right.
there's an adjustment on the interest rate for that purchase.
Right.
When you go through those home ready loans, that adjustment is not there.
Right.
So not only do you have a better interest rate, but if you're not putting 20% down, which most people out there do not put 20% down, you have a cheaper premium on your mortgage insurance every month.
Right,
So-
and this one can make a lot of sense where people go, well, why wouldn't I do the $1,000 down? The reason you wouldn't is because on the 3% is because you get a better rate, right?
You get a better rate. You can get a gift.
Yep.
Right? You can get a gift. You can utilize your 401k, any type of IRAs or retirement accounts. You can liquidate those accounts for your down payment. And we can talk about that when you're
a lot
when
more
you're ready.
options
There's a lot of options out there, you guys, and
And then you
it's
kind of jump into
amazing.
the 5% down to 20% down or more conventional. Which,
Correct.
Yep.
That's usually your step up buyer or someone. And here's a good point, you guys. If you put if you borrow less than 95% loan to value, okay, of the value
Yep.
of the house, we have a product. It's called single premium upfront mortgage insurance.
Yep.
Okay.
It's a nice one.
It is. and
Yeah,
it's
it can save you a lot of money.
It can. Now, I don't always recommend it with that low of a down payment. I'm looking at maybe 10% down or 15% down, and you want to have a credit score that's 720 or better to really make that product good for you.
Right.
But I tell you what, you can save hundreds of dollars a month by doing that single premium product.
Well, and then this is when I come across. I get this every once in a while. We got about a minute left, but the VA, right? That some people think that that they've used it once, that they can't use it again.
Oh,
no,
a bunch of
that's
times.
definitely wrong. Yeah,
Yeah.
definitely.
And almost always the VA makes most sense of all products if you're a veteran.
Oh, yes.
No question.
Yeah.
Absolutely. Zero down, no PMI. Interest rates are amazing.
And you can put money down.
You can,
Yep,
absolutely.
I'm doing one right now where they're putting money down. They're putting 3,000 down. It's not a lot, but it's something anyway.
Right.
So the real key is
Definitely.
when you figure this out, figure out all those pieces, the term, the down payment, what loan works for you. You want to remember that, right? As the consumer, know your loan.
Yes.
Because as you're talking to your real estate agent, as you're structuring your offer, it's like, I'll ask a client, well, what kind of loan are you looking at getting? And I don't know. It's like, well, that's a huge piece. Because
Well, and it can also matter for what types of houses you can even look at. There's some homes that will not accept FHA or VA.
Yeah,
so-
and when we get into our after show on Facebook,
we
let's
go. Let's get into that.
chat
Yeah.
a little bit
Yeah,
more
it's a good
about
conversation.
that. Thank you again for coming in, guys. Thank you,
Thank you.
to all the listeners
for having me,
out
Kurt.
there for tuning in. We'll be back again next week. After show.
The after show.
Turn down the lights. No, you see, you brought up the point about the type of loan that you get can determine what type of properties you can get approved or that will pass the conditional requirements of that loan. So you can't just go out and get an FHA loan and be like, I'm looking for a fixer-upper.
Right. And with
Don't
what
do
the
that.
market
No,
is
don't.
right now, too, there's a lot of agents and sellers that their home would fly without a doubt for VA or FHA,
Yeah.
but it seems they're not listing it that they would accept those terms.
Right.
Because they don't want to have to jump through the extra hoops of the additional inspections and whatnot.
Right.
Yeah.
Yeah, and that can sometimes be frustrating for me on the lending side because, they're going to be looking for chipping and peeling paint with the FHA and VA loans, but they're not that much different than a conventional appraisal.
Well, and
No, and VA I found is actually really.
Yeah.
Well, and that appraisal is
good.
supposed to be in the spirit of FHA or in the spirit
Correct.
of VA. That, if it's a good home, it's a good home. A little bit of
Yes.
chipping paint shouldn't make the difference. That home is not about to fall over because of a little bit of chipping paint.
Now, if you have a railing, you're walking out the front door and the railing's falling
Right.
over, then you're going to have to fix it.
Totally.
It's a no-brainer, right?
Right.
But knowing your loan is a big piece because when you go out and want to make an offer on a house, I think peace of mind, knowing what you're doing as far as financing, knowing your payment, knowing the term of your loan, what type of loan you have. When you find that gem that you fall in love with, you don't have to question.
Yeah.
Is this the right loan for us, or
Right.
maybe we can't afford this one because you already know your budget. We've talked about it numerous times. So
Yep.
and that's the fun part of my job is getting to that point with clients where they're like, "Wow, I didn't even know we could do this."
Right.
Right? Or, "Holy smokes, we can go out and purchase that house we never thought we could afford." So that's
Yeah.
fun.
Being a VA or FHA buyer in today's market is actually it's a tough thing to do because
is.
there's so many conventional buyers out there,
Yes.
and it's sellers, they're gonna go with the conventional stuff a lot.
I call it
lot
the gravy
easier a lot of
train.
times.
Yeah.
Exactly. It's the gravy train.
And Kirk does a good job too with the exploratory runs. I'm sure you do the same thing, Joe. But that gives these clients an idea of the different property types. Where me on the lending side, what I do is I have you send me those properties you're looking at as far as the addresses, so I can run the numbers.
Right.
You may not want to buy the house, but here's what it looks like as far as loan and payment. It gives you that different price point aspect of the.
Well,
payment.
I mean, she actually just got me thinking on the VA. So if you were to look, you can see what kind of loans people pulled when they bought it. If you see somebody was a VA,
Yeah.
you get that letter.
Ooh, that's a great idea.
Right?
Yeah.
I had that captain with the guard who wrote the letter, and we ended up getting it at a good value.
Anytime I have a VA buyer, it is strongly encouraged to write
Yep.
that letter
Yep.
because, help out her service people. It gets a little something anyway.
Should better.
Yeah.
Yeah.
So let's see here. Knowing your loan. So walking forward with that. There's some great tools though that are out there too. That you can use to calculate the payments really accurately. So that way, when you're looking at homes online, you can go, is this going to fit within budget?
Right.
Right.
Because sometimes it's really hard to tell, especially if there's association fees or no association fees, what the property taxes are, that stuff, getting that calculation correct in there, because there are a lot of tools that don't have that.
Right.
Exactly.
I mean, something else we didn't touch on either is just, we talked a little bit about having a good lender, having a local lender. It's something that I talk to my clients about a lot, that it's not as important the lender that you're working with until something goes wrong.
Yeah.
That is really when it's so important.
Right.
Yeah, you can have a great loan and a great process with one of these online people, but when something goes wrong and they're not available for you in the evenings and the weekends and don't have that personalized touch for you, man, it can all fall apart very, very quickly.
Yeah, no, good point. And two, the company I work for at Bell Mortgage, our back room is amazing. And what I mean by that is our operations staff. So
Right.
if I need to get rid of, or if I need to get a hold of an underwriter or
Get rid of an underwriter.
yeah, they're gonna like when I hear that. But my point is, personalized service goes a long ways.
Yes.
When you're talking, it's not just the loan officer; it's the people working behind the scenes.
Well, in-house underwriting,
Yeah.
I
Yeah,
think
that's
hands down
On my
is
phone, I have on speed dial numerous underwriters that I can call that will answer their phone. I'll be able to get an answer right there.
Yep.
Yeah. I mean, it's when you get that 1-800 tag, extension tag, let's call it, right? And so,
And then
my
voicemail.
Yeah, my underwriter in 5 states away, hasn't gotten back to me yet.
That's a reality
Sally's
out
on
there, yeah.
vacation,
It is. Well, I don't know when the appraisal's being scheduled. I haven't heard anything. Yeah.
Yeah, and be aware of those clickbait lenders. We see the billboards and we see the commercials on TV where you can get pre-qualified. Remember,
Yeah.
pre-qualified in minutes on your iPhone or Android. be careful on that, you guys. That's buyer beware. You're not qualified for that loan until you're sending your income docs. I know we already hit on that, but
Yeah, I mean,
I can't tell you how important that is.
I had a buyer. It's like you could watch the dominoes fall, and you can watch her pushing them over. In
Yeah.
a sense, it's like, well, I'm going to use this company. Okay. Well, did you ask these questions? No, I really didn't. But you know what? They didn't need the documents that your guy needed.
Gonna need them.
Oh, he is.
Yep.
Oh, I'm not very happy. My lender, they told me all these things, and then they end up changing it once I gave my docs, and it's like,
Right.
I don't know if we're going to be able to close on time because, I mean, it's.
Well, they found out about the child support on my pay stub that I didn't want to send.
Right.
Yeah,
You know,
we don't say these things because we're sitting there like. I mean,
Well, you want to give people the benefit of the
it
doubt.
is
You want-
illegal. It is illegal for us to make profit off of recommending lenders, right?
Yeah, we get no kickbacks
Right,
or anything.
right.
Yeah.
We can't do that. We're making it because we care. We want you to get
Yeah.
it done and get it done with the most reputable people. These are the people that I recommend or I use when I'm buying.
These are the people that I know are going to take good care of you.
Well, it's a direct reflection on you too.
It is.
Exactly.
That's
It
your
really is.
reputation.
Yeah.
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 And
So.
and they say an experienced home buyer is somebody who's bought 3 or 4 houses. I did 3 to 5 houses last month.
Right.
Right?
Yeah,
So,
good
I
point.
mean, I know who is reputable.
Yeah.
I want to give those recommendations. I don't
Yes,
do
right.
it just for fun, So,
Exactly.
let's see. I don't think I have. Just, make sure you apply right away. We talked really about most of the loan products. Portfolio, that's really the only one we didn't touch on. That's a great loan product for maybe your self-employed person or somebody.
USDA too, maybe.
Oh,
That's
USDA.
a big one. Yeah,
I've
USDA
got
is zero
Maybe
down
seeing some
program.
people that are moving outside the cities right now. I got
Yes.
one buddy that he's like, "Hey, we're out of here. We want to be 45 minutes outside the city." I'm like, "Dude, do it USDA.
Yeah.
It's probably going to be a great option."
Similar
for
to
you.
the VA, zero
Yes.
down,
Exactly.
no PMI or no
Yep.
MI. It's
And he'll
it's
end up putting
amazing.
money down, but he doesn't have to.
Yeah, that is a
And-
great.
Correct.
USDA typically has very good rates too, as well.
Phenomenal.
there we
rates.
go.
And I think
Phenomenal
they
rates.
have you can Google the map and you can
can.
see right where the boundaries are.
Just
Right.
Google USDA MN for Minnesota.
It's down
and
around
bring it up.
like Elko-ish, and then
It goes up by North Branch.
North Branch. Yeah.
But Northfield is one of the cities I think you can do USDA
Yep.
in.
Oh wow, I didn't know
They're
that.
moving it out a little more now. The
Yeah.
city limits are growing. I mean,
Totally.
it's
Yep.
great. Cities are growing.
Sprawl expands. Yeah.
But no, another piggybacking on the portfolio loan, Kirk, is we have a doctor loan. So if you're coming out of college looking to get into the medical field, we have some amazing programs for you. If you're a dentist,
I'm actually doing one of those
are
right
you?
now.
with Mr. Nolan.
Yep.
Yeah.
The dentist one.
So it's huge. There's things out there, and you don't have to be in your career yet to take advantage of these doctors and dentist programs. Because you're coming out of school with a fair amount of student loan obligations.
Yeah, I
there,
think
too.
the dentist one it's for DDS, I believe, so
Yeah.
doctor's dental surgery,
Yeah.
and they can put less than 20% down with no
amazing.
mortgage insurance.
Yeah.
Fantastic.
So
Can
Those are
I
things you
do
don't know.
commission rebates for free fillings on myself?
I have to go to the dentist soon. Let's not talk about that. I don't like the dentist.
All right. Well, that's all I got. You guys.
Good show.
Yeah, good
anything?
one.
All right.
If any of you have questions, just call us.
Yeah.
Let us know. Give us-
Anytime.
shoot a message over to Kirk.
Hit us up on Facebook or give me a call, 651-303-0019. Be back next week.
See you guys.
Have a good week.